But what's the other chartbuster ideas that our chartists have for us? Let's go to Kunal first to find out just that.
So Anisha, it's on IPCA Labs, again one from the pharma pack, and how the stock has given a big breakout of a major downward trend. So this was in 2021 end where the stock made a high of 1400, and there was a almost like a straight line fall for the stock from 1400 to 650 levels. Consistent pattern of making lower highs and lower lows. As you can see that the stock was consistently taking resistance at this major trend line, again forming a series of lower highs on a relative basis over the last 1.5 odd years. But what has changed for the stock is the breakout which has happened for the stock at this current levels of 750 approximately. This ended the series of lower highs and lower lows for the stock, and now we could be at a cusp of starting a higher high and higher low pattern for IPCA Labs, which means from current levels, if in case the stock dips back towards the 750 mark, that should be taken as a good buying opportunity. So any retracements over here closer to this main or median moving average closer to 750, 800 levels for the stock should be taken as a good opportunity for buying the stock, because I'm expecting that the stock would probably try and play a cover up or a catch up of this huge underperformance which it has seen in the last 1.5 odd years for itself.
IPCA Labs, very interesting move coming in on the charts, and that's a chartbuster idea coming in from Kunal. Nooresh, what about you? Anything from the pharma pack for you as well?
Not from the pharma pack, looking at oil and gas. So that's a chart for ONGC. Now this is a dividend adjusted chart. The last time the stock was at 175 was back in almost a year back. 175, 180 is a resistance. Short-term breakout done on a cup and handle basis around 165. Could consolidate here for some time before making that bigger move, but it is setting up for a much bigger move. Also, for the last 15 years, the stock has underperformed. The stock used to be 160 back in 2007 as well. So the only returns which have come is in the form of dividends. So technically setting up for a bigger breakout above the 180 mark. It's an accumulated 165 to 170 zone, stop loss at 160 and a target price of 250 in the medium term.